economy. And a real important tool, a very combative tool, would be to say that the blocking statute takes effect. What is that? That means that the EU can essentially say to the United States, regardless of what you decide on punishing our company on sanctions in relations to Russia, we're not going to accept that, at least as it pertains to the European market. Whether that's wise, one doesn't know, because, of course, a lot of European companies want to do business in the United States further along as well. There are these measures. It's, in a way, a toolbox, but we don't have any details yet of what exactly Jean-Claude Juncker wants to do with that.
Well, thank you very much, Ulrich. We'll continue to follow those market news. Enjoy the rest of the day. We're moving now to the U.S., where the stock index futures pointed to a slightly lower open as investors prepared themselves for another week of bumper earnings report. Now, Alphabet, Hasbro, Acronic, Halliburton are some of the major brands set to release corporate earnings before and after the bell. Now, sticking with releases, market watchers will be on the lookout for key economic data, including the Flash Composite Purchasing Managers Index due out at 9:45 a.m. Eastern Time, followed by existing home sales data due out at 10 a.m. Eastern Time. Looking at the futures numbers there, they are all in the negative zone, actually. Dow Jones Industrial Average 0.15% down, S&P 500 0.04% down, and Nasdaq 0.04% down. In Asia, markets traded mixed today, with traders focused on the wobbling dollar and the upcoming two-day policy meeting from the Fed later in the week. In Australia, the ASX 200 fell 34.74 points, with most sectors finishing lower. Japan's benchmark Nikkei 225 pared some of its losses to close down 124.08 points, while the Topix index closed down 8.42 points. Across the Korea Strait, the Kospi retraced early losses to close nearly flat at 2,451 points. On the Chinese mainland, the Shanghai Composite bucked the downward trend to close up 12.5 points. The Shenzhen Composite reversed early losses to tack on 8.85 points. In Hong Kong, the Hang Seng Index traded up 0.45% in late afternoon trade. And to other market news, Zimbabwe's largest fast food restaurant operator, Simbasa Brands, plans a secondary listing on the London Stock Exchange's junior market to raise capital to expand and for a potential foreign acquisition. Simbasa listed on the Zimbabwe Stock Exchange in November 2015 after being spun off from manufacturing group Inscore Africa. The company says its board of directors had approved the application to list on the alternative investment market and is now awaiting approval from the central bank and local regulators. Simbasa owns some of Zimbabwe's most well-known restaurant chains, including Pizza Inn and Chicken Inn, as well as franchises from Fernando's and Steers of South Africa. The company has outlets in 11 African countries, including Kenya, Ghana, Mauritius, and Zambia. And to commodities matters now. South Africa's Anglo-American platinum interim profits fell 55% on lower sales, a stronger rand, and tax impairments. Amplant's headline earnings per share, the main profit measure in South Africa that strips out certain one-off items, fell to 285 cents for the 6 months ended June 30 from a restated 629 cents per share in the previous period. Now, this was in line with what the company had flagged to the market. Amplants, the world's largest producer of the precious metal and a unit of Anglo-America, says it recorded attributable post-tax impairments of 2.2 billion rand, which also impacted its earnings. And Tanzania's President John Magufuli has threatened to close down all gold mines in the country if mining companies delay talks with his government aimed at resolving allegations of tax evasion. The announcement by Magufuli, nicknamed the bulldozer for his forceful leadership style, marks a further escalation of a dispute with foreign companies like Acacia Mining over export revenues. Magufuli has sent shockwaves through the mining community in Africa's fourth largest gold producer since his election late in 2015 with a series of actions, he says, aimed at ensuring that mining companies pay a fair share of taxes. The government has accused Acacia Mining, the country's biggest gold miner, of evading taxes worth billions of dollars by under-declaring export volume and value of its minerals. In the meantime, Acacia Mining aims to reinstate its dividend in early 2018 if Tanzania ends a concentrate export ban that forced the miner to abandon a payout for the first time. Since the ban was imposed in March, the London-listed Acacia, majority owned by Barrick Gold, has nearly halved in value and is burning $10 million to $15 million of cash a month. The Tanzanian government agreed to hold talks over the ban with Barrick, but those negotiations have not yet begun. Acacia and Tanzania are also at loggerheads over allegations of tax evasion, and the government is reviewing all existing mining licenses. Acacia, which is Tanzania's largest miner, suspended its dividend for the first time in February. It raised its payout for nearly 150% for the previous financial year to 10.4 cents. And to the global precious metal market, gold touched a 4-week high in early trade, supported by weaker equities and a dip in the dollar to fresh 13-month lows due to political uncertainty in the United States. Spot gold was trading up 0.1% at $1,255 per ounce. It hit a 4-week high of $1,257 an ounce in early trade, having risen 2.1% last week. U.S. gold futures for August delivery rose 0.1% to $1,256 per ounce. After the break, we'll look at all the stories coming from the commodities markets. To stay with us.